Bears have transformed into bulls almost overnight. Everyone's buying, bullish sentiment is through the roof because everyone thinks the approval of a spot Bitcoin ETF is inevitable. But you know what that means? It's the perfect time for the market to dump. In this video, I'm going to go into everything you need to know about the potential Bitcoin ETF market manipulation. It's time to discover crypto. The thing is, most crypto gurus talk about the 4-year cycle, and they spend hours analyzing charts years past trying to predict the future. YouTubers make wild prediction videos for views and just use this as straight up clickbait. But sometimes these predictions come to fruition, and sometimes they go horribly wrong. Like during the last bull run when everyone thought Bitcoin was going to 100K, and yet here we still are, waiting for it to hit 100K. But here at Discover Crypto, we go into in-depth research to help you understand financial and crypto markets. That way you make the right choices for yourself. You see, what most people miss in their predictions is the immense amount of market manipulation that takes place in the crypto industry. And this is only going to exponentially grow as more and more institutional investors enter this space. As we saw in the last cycle, when various entities crashed the market, we got that really strange, never before seen chart pattern versus the typical blow off top. I think the way that SEC is handling the Bitcoin's ETF is just another way for big institutions to manipulate this market. This can also be interpreted as the ever-growing wage versus prosperity gap that has been building around the globe for the last 3 decades. It seems that there's a favoritism for institutions. So in order to be prepared for the future of market manipulation, we need to take a look at how other markets have been manipulated. Now, the market I believe is most comparable to Bitcoin is going to be gold. Bitcoin is often looked at as digital gold. So let's take a look at the precious metals market. The shiniest hedge against inflation. And institutional market manipulation has skyrocketed in the past decade, with scams ranging from passing of tungsten as 400-ounce gold bars to claims that JP Morgan actually artificially suppressed the price of silver. The guy who accused JP Morgan of suppressing the silver price ended up getting hit by a car. Is that a coincidence? Now, even though he only got minor injuries, that's still pretty sus. And Market Favor straight up admitted the market is manipulated when he said all the people that are bitching about the manipulation of silver and gold should be happy that it is manipulated, because it still gives them an opportunity to buy it at a depressed price. So essentially, rich people are saying it's your fault they're manipulating the market. And little by little, the government is making a show of holding people accountable for manipulating prices. They create a case when institutions are so blatant with their practices that the Fed's hands are basically tied behind their back. Traders at JP Morgan were accused of manipulating futures on various metals like gold, silver, platinum, and palladium, and they used a method known as spoofing, which involves placing a huge public buy order, subsequently canceling that order, and then selling it. This creates a false sense of demand that tricks retail investors into buying so institutions can pump on them. 2 of the 3 traders who were accused ended up being convicted. And JP Morgan paid a whopping, and get this, what did JP Morgan have to pay? They paid a whopping $920 million fine. That is a slap on the wrist for them. Why is it always that JP Morgan doing sketchy stuff gets off with just a mere fine? They straight up just consider this to be a cost of doing business. Now, funnily enough, spoofing has been used in the crypto world as well. You see, oftentimes people like to look at crypto as this emerging asset class that is breaking away and decoupling from the traditional stock market or the finance system. And this is why I like to look at crypto as just Wall Street 2.0. If you're gonna play in the jungle, you need to understand how it works. Predators are going to come in and they're gonna eat you. In 2017, the crypto community gave an unknown trader the nickname Spoofy because they suspected him of manipulating prices on Bitfinex. And we know big institutions have used other methods to suppress the price of Bitcoin in the past. For years, the news cycle and crypto Twitter have been wielded to pump or dump Bitcoin's price. It's so predictable. It's so predictable that every time an article comes out about how Bitcoin is bad for the environment, I basically use it as a call to buy. But when I hear people like BlackRock's Larry Fink describing Bitcoin as a flight to quality, I think to myself, maybe this is the time to take some profit, or at least keep my powder dry so I can buy when prices drop. After all, Larry Fink has been saying for years that the market of Bitcoin is an index for money laundering. It's a scam. It's a Ponzi scheme. Well, it turns out he was investing the whole time.
You know, people are speculating on it, but most importantly, what I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world. You're seeing the demand for it, but let's be clear, if we created a true global digital currency, I hate the word crypto, a digitized currency, then then you would not have money laundering anymore.
Now let's not forget about Elon Musk and his historic shitposting that helped bring the spring and summer bull run collapse of 2021. Plus, there were plenty of other bad actors trying to suppress Bitcoin's price at the same time behind the scenes. And now we have actual proof, straight out of the polycule. Sam Bankman-Fried's girlfriend alleges that he knowingly tried to keep Bitcoin's price below 20K, and that he sold coins that didn't belong to him to do so. Investor funds. Okay, but you may be asking, why big investors want to suppress prices? Why would institutions act like these bad actors? Aren't they the good guys? Don't they benefit from the market consistently going up and to the right? Well, I'll leave this to Mark Faber once again, who explained that if you suppress the price of an asset, you're basically guaranteeing it will go ballistic down the line. If you can control the market, you can control when the top hits, so you can dump on the dumb money and take advantage of, well, the people that don't understand the market. Also, artificially suppressing the price gives institutional investors more time to load up on lower priced crypto. Throw some manipulation into the mix and they get to trick retail into selling along the way. Everyone gets excited that the bull run is starting, buys, and then the market dumps, causing more panic selling. So how do Bitcoin ETFs play into all of this? And how are they going to use this to manipulate markets even more? Well, let's take a look at how gold's ETFs impacted demand. They were introduced in November of 2004. And at the time when central banks had just finished selling, the gold price had officially bottomed. And that's exactly when investors were beginning to get back into the market as a hedge against policy failure. Does this sound familiar like where we are today? Because to me, we seem to be in a reality that is very similar to that market. Now, what happened is after those ETFs launched, people pumped a ton of money into it. I'm talking trillions upon trillions of dollars. The first one reached more than $1 billion worth of assets in only 3 days. And the price of gold doubled in the next 4 years. Right now, the SEC is considering 8 to 10 filings for a potential Bitcoin ETF product. If these companies even put 1% of their assets under management into these ETFs, this alone could add $1 trillion to the cryptocurrency market cap and potentially bring Bitcoin's price to somewhere between $70,000 to $100,000. And if Bitcoin follows the example of gold doubling in the price over the next 4 years, well, if we replace that with market cap, those numbers are definitely not out of the question, and in fact, Bitcoin could reach prices of a $250,000 price target. Either way, remember the SEC already approved a Bitcoin futures ETF, so they become hypocrites not to approve a spot ETF, and that is why everyone believes that the approval is inevitable. So if that's the case, why doesn't Gary Gensler just announce it? Well, that's why I have a theory that wielding the SEC to do their bidding is the latest form of market manipulations used by big institutions like BlackRock, State Street, and Vanguard. When you think about it, it's brilliant because they have total deniability. And that's exactly why we need to understand who Gary Gensler is and why he's the perfect puppet for the big banks and hedge funds. Gary worked at Goldman Sachs for 18 years, all before he went into the government. During that time, he was on the board for a for-profit university, where the majority of students didn't graduate and still left saddled with huge debts. Gary loves banks so much that he was an architect of the Dodd-Frank bill, which has systematically consolidated wealth and power within the mega banks while making it harder for regular Americans like you and I to qualify for a home loan. You remember that wage versus prosperity chart I was talking about in the beginning of this video? Yeah, every economist, financial institution, tech company, banking giant, they have all lied to us for decades. The dollar has been losing value since its inception. So is it a coincidence that big institutions have been buying more and more real estate while more and more Americans are perpetual renters? I think not. I think we're moving towards you will own nothing and be happy. So we know Gary has a track record of consolidating wealth amongst his buddies at banks and hedge funds. In fact, the timing of these ETF applications is a bit suspicious. You see, while there's this positive traction around the media from Bitcoin ETF approvals by BlackRock, even though Kathy from ARK Investments announced their goals for an ETF in 2021, it was kind of looked at as a myth. Yet, BlackRock filed for a Bitcoin spot ETF only a week after the SEC sued several exchanges like Binance and Coinbase for supposedly violating US securities laws. Gary once said, "If we're not losing cases, we aren't suing enough businesses," which led Jay Clayton, the former SEC chairman, to question his motives about leadership. It does seem that the SEC is suing random companies in the crypto space, not out of cause, but potentially due to a vendetta or other motives. And there's always been a ton of speculation on X and Reddit about Gary's relationship with SBF, and the reports that he's been holding a grudge for not getting a job at Binance in 2018. You even had Congress call him to testify, deeming him overly aggressive and unclear in terms of his digital currency regulation. Gary is a pawn to these financial elitists. There's a lot of allegations that date back Gary to 2018 when he was teaching at MIT to students about how Ethereum was started. Now that's for another video, but it led up to a project known as Prometheus partnering up with Wangchang Blockchain Labs, where Vitalik Buterin is the chief scientist, but ultimately partners with Prometheus, which Gary Gensler and the SEC has used as their poster child for the last year. Haven't heard of him? Well, be sure to smash that like button and let me know in the comments if you want a video on the breakdown of Gary Gensler's puppets. So if Gary is a pawn of BlackRock and these financial institutions, it's not a big stretch to think that he'd take a call from the heads of these funds, during which they might ask him to slow down on the Bitcoin spot ETF approval, so that way they have more time to buy cheap Bitcoin, or threaten his job position. After all, they are lobbying each and every single one of our politicians. Now, I still think the ETFs will have an overall positive price impact on Bitcoin and the whole crypto industry over time. But I want you guys to be prepared for these big institutions coming into the sector, as they might be using the SEC to crash the market over the next few months so they can buy cheap. So make sure you're always practicing good risk management if you're trading, and take profits when you feel the euphoria. And as always, keep some funds on the sidelines so you can buy the dips when they occur. Because even though as it seems like Bitcoin spot ETFs are inevitable, Gary Gensler and the SEC can take things as far as denying the entire process and forcing these companies to go into litigation. I mean, even just 2 months ago, there was not a single retailer or news outlet that was talking about a spot ETF. Cointelegraph ended up leaking an article too early without verifying a source, breaking all the rules of journalism, because as their chief editor said, if you're not first, you're last to the news. And that is something we will never do on Discover Crypto, because you guys have the right to understand how these markets actually work. And we're not here to spread FOMO to create euphoria in a market that is highly manipulated. It could be 3 months, it could be 6 months, it could be after the next presidential election. And yes, I truly believe a Bitcoin spot ETF will come, and billions upon billions of dollars will come into these markets. But just to sit back and act like charts are going to just go up and to the right from here, I'm not buying it. So that's all I got for you guys today. So let me know when you think Bitcoin ETFs will be approved. Is it going to be by the end of the year? Is it going to be in January? What price do you believe will reach after the approval? I'd love to hear your guys' thoughts in the comments below, because no matter what, we are going to see each other at the top of this next market.